Welcome back to the Investor Mindset Podcast. I'm your host, Steven Pesavento, and each week we share mindset tips and real estate investing strategies to help you grow your business and take your passive investing portfolio to the next level. So today is no different. We're going to be talking about one of the fastest growing markets in the country, one of the things to look for when investing in growing markets, and a little bit more about what we're doing today. So with that said, let's dive right into it. Let's not waste another minute. This is the Investor Mindset Podcast, and I'm Steven Pesavento. For as long as I can remember, I've been obsessed with understanding how we can think better, how we can be better, and how we can do better. And each episode, we explore lessons on motivation and mindset from the most successful real estate investors and entrepreneurs in the nation. So as we are talking about fastest growing markets in the country, it's always important to understand where is population moving? Where is the people moving from around the country, and where are we seeing the most growth? Interestingly enough, we're seeing Phoenix as one of the fastest growing markets in the country. Number one for population growth in 2020, number one for the past 5 years in population growth, let alone seeing a rent growth of over 21% from July of 2020 to July of 2021. What does that mean? That means it's a market that is experiencing a lot of growth. Many people are moving to this market. And what does that mean for multifamily? What does that mean for real estate? It means great opportunities to be able to own assets in areas where people want to live. When you're in an area, when you're in a market that is growing rapidly, what ends up happening is rents go up, values of homes go up, and therefore the values of the apartment communities that we're owning go up as there's more interest of investing in that area. So what happens is lots of institutional money, lots of mom and pop investors, they all are looking to be able to get involved in these deals. And so it takes a very strong team that has really good relationships to be able to get off-market deals that don't have the level of competition, to be able to buy right so that you have the opportunity to go in and actually add value. And as a result of adding value in a market that's experiencing compressed cap rates, in other words, the values of properties are going up in relation to the amount of net operating income, net of essentially the profit that is being kicked off by these properties. When that compression happens, when you're able to increase the value of a property in a very short amount of time, it ends up leading, especially when the compressed cap rate market, ends up leading to great upside for you as the investor or you as the operator. So what you want to be doing as an operator, what you want to be doing as a passive investor is you want to be looking for markets that are in the path of progress, that either are currently experiencing growth at a very high level like we're seeing within the Phoenix market, or you want to be looking for where people are going to be moving in the future, that you're going to expect or project that they're going to be experiencing that growth. One of the advantages of investing where they're already experiencing that growth is there's a higher likelihood that that growth is still going to continue if the market dynamics and economics that are happening in that market are going to continue to be present in the future. Now, you don't want to just jump on investing in a trend. What you want to do is you want to invest where that trend is going. So if you're seeing lots of growth happening in a market, you want to make sure that there's still going to be lots of investment happening in that market from local employers, that the population is moving in that direction, that the demographics are going to be able to support the asset that you're actually investing in. But when you've been able to go through the process of figuring that out, and when you're able to work with sponsor teams and operators that have a really strong understanding of the market and the market dynamics that are going on, you're going to be in a very great position to be able to get ahead of that. And so it's one of the reasons we love looking at a market like Phoenix, love looking at markets like Dallas, like Denver, like Jacksonville, like many other markets that we're investing and excited about investing in, is we're looking to get ahead of where that growth is happening, or to be able to join in the investments with operators that are already operating and executing within those markets that have those strong market dynamics. But the key is you don't want to buy in the frenzy. You want to be able to buy off market. You want to be able to buy where you're able to get a really great deal. Because when you're able to get a great deal and you're seeing growth happen and you're able to stack on top the ability to execute a great value add strategy and you're able to manage the property really well, each of those little components adds up to being a great advantage. And that great advantage ends up leading to a much higher likelihood of success and a much lower likelihood of any kind of loss, let alone loss of return, but loss of principal. And as an investor, that's what you want to be focused on. You want to be looking at things from a risk to return ratio. What that means is you want to be looking at things from an investment perspective that offer a higher rate of return in relation to the amount of risk being taken. If you buy an asset that doesn't have any value add, doesn't have any renovation, the return is just based on continuing to operate the property, but you don't have an opportunity to add value, what you're going to look at is you might have a lower risk profile, but you also will likely have a lower return profile. So if you're able to find a very high return profile, but the risk is still low, then that's a great opportunity. Now, on the other hand, if you're able to add a lot of value and you have a very strong team that's experienced in executing a value add plan and being able to quickly and very strategically execute that construction plan or that expense reduction plan, then you could actually look at the fact that so much return is created as a lower risk opportunity, because even if there was a change in the market, there's still a huge buffer and equity being created that ends up leading to a protection of that principal. So there's different ways to slice it up to be able to understand how you're going to go about creating great risk to reward ratio. But at the end of the day, it really still comes down to one thing. It comes down to knowing that you're investing with a great sponsor that has really good relationships, that has a track record of executing, and that has the ability to go and find great deals and the expectation they will continue to do that in the future, and to have aligned interests to make sure that they are going to choose what's best for the investor when an opportunity comes up. So these are all things that are really important. It's one of the reasons we like investing in some of the fastest growing markets. We're seeing a lot of them. We'll be talking more about some of those markets and maybe some more details in the future. But this is what you want to look for. And with that said, I want to invite you, if you're interested in learning more about investing in the same type of deals that we do here at Von Finch, and this is available to you if you're a non-accredited investor or you're an accredited investor, the way that you can learn about getting involved is actually by scheduling a call directly with us or a member of our team. If you're non-accredited, you got to go through a qualification process, which there's a few questions, understand a little about you, your background, and understand if this is a good fit. If you're accredited, we'll go through the same process, but you're automatically swept in as long as you meet the most important criteria, which is you're a good person and you're somebody that we want to work with, because we have a no jerk policy, of course. The way you can do that is you can head over to vonfinch.com/call. That's CALL, vonfinch.com/call, and you can schedule a time directly with me or a member of our team to learn about getting involved in investing in the same type of deals that we personally do. And it'll be a great opportunity for us to get to know you. We have some opportunities coming down the pipeline or currently available that would be perfect if you're looking at getting involved. And the only way to get involved in some of these deals is either be an accredited investor or to have established that relationship and gone through that qualification process, which you can only do by scheduling a call directly with us. So head over to vonfinch.com/call. I look forward to serving you, and thank you so much for being an avid listener. Thank you for looking at creating your own freedom, flexibility, and fun out in the world. And I look forward to seeing you on the next episode.
Thank you for listening to the Investor Mindset Podcast. If you like what you heard, make sure to rate, review, subscribe, and share it with a friend. Head over to theinvestormindset.com to join the Insider Club, where we share tools and strategies from the top investors and entrepreneurs on how to take it to the next level.